All right, we're going to go through how to read a little bit better and understand our oscillator down here and how it relates to price action. And so this will give you a good insight on the market and finding better opportunities, hopefully. And so we have our rate of change. This is the dashed line here that runs through rate of change, and then we also have our slow, or we would call this maybe the fast, our span, which basically is our convergence and divergence, similar to a MACD. And then we also have our relative momentum, so which is the blue line. All right, so when the green and blue line are below the X rock, or this dashed white line, we look for selling opportunities. When it crosses above, the green and blue line cross above the white, we want to look for possible buys. And so in trading ranges, of course, it's going to kind of whip back and forth across them as well. So understanding how to see a trading range, how to devise that it is a trading range, is critical, which we talk about understanding context and price action. So, but trading these custom OHLC average bars, what we want to look for is buying above and selling below, and buying above and selling below, and that's a good start. And then from there, we could also add in our trend or our highway here. So again, if price is below, we would be looking to sell. If price is above, we'll be looking to buy. And there's a couple caveats to that. You could do like double tops and double bottoms, or that kind of thing, and take reversals. Also, we could do divergence on our convergence divergence indicator, the green line, or even the blue line. So with that being said, let's just talk about the green and blue line below. And so the market opened, price was below, we get the blue line crossing back below the green line, and we get a breakout here, and this made for a nice little move down. And again, the market kind of made its move up, and here we get a slight pullback, but we didn't get a cross, and we have everything crossing up on our oscillator. So in this scenario here, we'd probably look to possibly sell here, but you also have to realize that we were down near the 10, which is the red line. So usually when it's at the red line, it's going to go back to at least the median, so the 50 zone, let's say. And a lot of times when it's down here in this zone, it's going to go all the way back to the caution zone around the 70. So, and that would actually help maintain the trend. So when we see the market all the way down here, yes, the market could just keep selling off, but in most cases, you're going to see the market make a two-legged reversal back and then decide what it's going to do. So that's why we wouldn't want to be selling right here on this these bars here, even though they do state that it's a rational place to short. So the market does cross back up, and then we have this move back down to our rate of change, and then we get a bounce coming back off of it. So it doesn't matter. You could take it. We don't take doji bars, so we don't take these bars. But here, this bar or this bar could have been an entry bar, and then you would let that go out 3 or 4 bars and then trail. So that would have also been a really nice one. And then if we see we're up here around our zone where it's getting to be between the orange and the red. So again, a place where there's going to be a pullback. We also have a sell zone here. Then the market makes a two-legged pullback here on that. So we pull back down underneath, and so here, this point right here, this would be a place that you could sell short as well. It's rational that this is going to go test these bottoms again. It didn't. It made a double bottom of itself. So in these situations, those are best to close for maybe a break even, maybe you lose a couple ticks, and then you would look for a double bottom reversal trade and for it to retest these highs. So at least these double dojis here and that spot. So, and that's usually what happens, is they'll retest those zones. At this point, we do have some divergence up here at the tops. So again, the market came back over our rate of change. It pulls back and then it bounces off of it. So again, any one of these first two green bars would have been a good entry. Again, 3 or 4 bars and let it run, or that kind of thing. Now again, we're up here, we're at the sell zone again in the middle. So again, this also would be a good place to sell short, even though we're counter trend because of the location. It probably would have been a break even, or like I said, when it sets up, you would close and then reverse the trade for the long position. Here at the top, these are always a good bet. We're up there. We still have divergence going on with the market at this point, and we have a sell zone up here as well. Couldn't quite hit the highs of yesterday, so this would be a good point to say that they failed possibly. So you, again, on the first 2 bars here as an entry bar, and run that down. So again, the market now crosses back underneath, and so we would look for that pullback and then for it to bounce off of our rate of change there as we kind of kept going down. And so we get this pullback here and then a nice entry. We could have this first or second white bar there to sell short, and that would have been also a pretty good spot. And then we make it all the way back down to the bottom there. Here we go, back to the bottom here. And we're back at that 10. And remember what we just discussed, that most likely we're going to get some type of pullback to at minimum the 50 zone, this middle, the median. And we actually got another turn down here, which rationally this could be a sell as well. And now once this passed the bottom here, but it wasn't getting back down here at the bottom, that's where you would have to worry about the divergence and the divergence setting up, because this is a good price divergence here. We also have order flow divergence. So with those two in mind, crossing back above our rate of change or XROC, and so those first 2 bars there as an entry bar, and then again 2, 3, 4 bars, and then let it run. We're above now. The market kind of chops around up here. So what do you do with that? Well, we do have a sell zone here. So if the market gets close to that sell zone, you could try to sell the first or second bar here again. Again, we're above. It's still showing some type of move up. So, and also after divergence, like I said, we usually are going to try to get back to, at a minimum, the 50 zone, and that's if the market's trending and trending pretty hard. But usually it'll go back to this 70 zone, which you see that it bounce. So it's making about 3 legs up right there, so kind of a wedge in a sense. And again, this is where understanding some price action and knowing what's going to happen on the backside of the price action so that you don't get yourself caught in something. And then the market does make a move off, and you had like 3 little legs up here, and so basically we have this reversal coming back down off of that zone, and it starts printing other gap zones. So market makes its move back to our 10 zone again. Very good spot for a reversal. And would you grab this? Well, it didn't double bounce or anything, but you could have tried that. We also have it come right off the 50 zone and here off our sell zone. So this is being a sell zone, and the market's trending, meaning it's creating gaps. So this could be a good place to sell short as well. Just it's a good rational spot. Again, doesn't get much out of it. It stalls, doesn't quite make it. And then again, these are where this starts to stay above our TOTxosc or our rate of change. So these would be good spots to go long. It grinds its way up another spot here and grinds its way. And again, I would not be looking to probably buy these because of this sell zone being up here. And also we have our spans, our volume spans. So these are places where they're going to get defended as well. So I probably would wait for the sell off of that zone. So usually on one of the midlines is a great place. The first reversal bar, second reversal bar, and take this back down. Retest the lows. It doesn't get through the lows, and so now we're about 930 or so. So a little bit of understanding how to trade above and below the TOTxosc there, and I hope that helps out.